Hey, what's going on, guys? Welcome back to the Money Way, and welcome to part 1 of Stock Investing 101. So this is all the way from beginners to advanced. I'm going to start with, if you guys don't know anything about investing, this is the perfect place to start. I'm going to go over what is a stock, the different types, ETFs, gold, whatever it may be. I'm going to give you guys the basic rundowns, and over time, we're going to start getting more advanced with how to analyze charts, how to analyze financial sheets, how to analyze how a company is doing financially and economically. Whatever it may be, I'm going to give you guys the entire rundown on how to invest and how to be a pro and basically take care of your money over time. So whether you guys are getting, the stimulus check in the mail, you guys just got a new job, whatever it may be, you want to take care of yourself financially, stocks are a perfect way to do this. Now there is, real estate investing, gold investing. Those are different things. But of course, stock investing is a main priority, and a lot of people that are taking care of the money today, because there's things like dividends, there's things like ETFs to give you the diversification that us as responsible investors we need. And dividends can also pay you, passive income over time. The stock market is a great place to get into if you overall want to be more responsible with money and make a lot of money in the long term. Now, the stock market is definitely not for short terms. If you want to, make a lot of money in the short term, go rob a bank, go, sing a song, get famous, whatever it may be, or become a trader. Now, this is a completely different series. We're not going to get into trading. We're going to get into a little bit on how they do it, but this is not a full, tutorial on how to trade, how to analyze like trends in stocks. We're not doing that at all. This is just for basic to advanced investors that want to find out what stocks are going to blow up, how to analyze basic companies in order to invest in them for 1, 5, 10, 20, 30 years, your entire life, whatever it may be. Now, to start off, there's many different brokerages. So there's, the Robinhood app, there's Stash, there's E-Trade, Fidelity, whatever, brokerage firms you guys use, it is all basically the same thing. I'm sure a lot of you guys are seeing the ads or on the news that this Robinhood app is going, viral. Honestly, Robinhood is probably one of my favorite ones because it makes it very, very easy for especially new investors to kind of get into the sport. I mean, there's all the different collections. You got your stocks right in front of you. You got your watch list. You got your cryptocurrencies too. You can even invest in, Bitcoin, Ethereum, Litecoin, whatever it may be. We're not going to go a whole lot of detail. That's for another series. But, we're going to go over cryptocurrencies a little bit. But anyways, guys, grab your popcorn. This is going to be a long series. But trust me, at the end of this series, you're going to feel like a new person. You're going to feel so responsible with your money. And you're going to know that 5, 10, 20 years from now, your net worth will, double over time, triple over time. Because this is a long-term game. You're not going to see a whole lot. I'm just going to, lay it flat out for you guys. If you guys think this is going to, get rich quick scheme, whatever it may be, those guys use stock traders, the 30 racks in my hand, whatever, those stock traders on, the YouTube ads. This is not that at all. This is for the long term to be responsible of your money. But anyways, this is the Robinhood website. There's also an app, which is basically the same thing. The app, in my opinion, is extremely clean. I really like how it looks. It makes stock investing overall very, very easy. So you have, your net worth. You have the week chart. There you have the monthly chart, 3 months, 1 year, all time, whatever it may be. I'm not just starting out, but I really wanted to get into this Robinhood. I do have an E-Trade account. I do have a Stash account where most of my money is. But in order to, project like how new investors would get into this, most of them would use Robinhood. So I made an account just for you guys and just to make these videos for you guys in a sort of way that a lot of people could connect with. So you have your net worth, right? You have all the money, all your stocks, your options, your cryptocurrencies, whatever it may be. You have all right here. You have, the different price points. At one point, I was straight balling, 2,700. You have the amount of money you're up or down. you have the percentage changes, and then right here you have the different collections. So there's upcoming earnings. Earnings is when a company, after every quarter, so of course there's 4 quarters in a year, so after about every 3 months, they'll basically say per share of their company if they're either profitable, neutral, or negative. And we're going to get into that. Once you click on certain stocks to analyze them, it makes it very easy to see previous and upcoming earnings, and seeing how it gives you a basic analysis on how the company is doing based on what other people are predicting it to do. So you have the 100 most popular. This usually, if you want a safe bet, the 100 most popular is the ones that I look at the most, because of course if there's a lot of people getting into one stock, then it is probably worth your time. But no matter how many people say to jump in on whatever stock it may be, and it looks like, not that good to you, then of course you want to do your own research on it. You want to make sure that every investment is great in your book, because there's thousands of stocks on there. You don't have to buy a certain one just because other people are telling you to, or maybe you heard it on a trader video, you heard it on a YouTube video, on a TikTok video, whatever it may be. You always want to take care of yourself and be responsible with your money. Because right, especially right now during coronavirus, you probably aren't getting a whole lot of money. I mean, you might have gotten laid off. Rip to my boys who got laid off. Definitely me too. I feel you guys. And now more than ever, you really want to be responsible with your money and make your own choices. But anyways, my favorite section, technology, because I feel like in the next couple years, 5-10 years, we're going to be fully underwater in technology. Next, you got oil and gas, which is not doing too good right now. You have finance, software service, energy, manufacturing, consumer products, ETFs, which is something we'll get into, I believe, in this video, video games, social media, one of my favorites, health, and entertainment. So a stock can of course be in multiple of these categories. So like Apple would of course be in software service, and they would also be in technology. They're probably also in consumer products, because that's because good companies have a large amount of different revenue streams. So if you want to look for those companies that are in a lot of different categories, because that means they have a well diversified range of services and products in order to get the maximum amount of revenue that they can in a world like this that's ever getting so sophisticated. Anyways, next you got what traders are mainly looking out for, but also very important to investors, you have the news. So the news can sway a stock by absolutely very, very large amounts of percentage. I believe it was AMD on Friday went up 17%, which is absolutely crazy in one day, because Intel delayed the coming out with their I believe it was the 7th gen chips. So Intel dropped 17% while AMD went up 17% just because of one news article exposing that they delayed the coming out with their 7th gen chip. So the news is very, very important for all types of investors. If you own any stocks, if you own any real estate, whatever it may be in any investment, the news is always something you want to look out for. You want to be, that investor with your armor. You got to have, that sword. You got to protect against the media, and you got to be well educated at all times to see how your investments are doing over time. So what makes it also very easy on Robinhood is you can see what stocks were affected by what news article. So McDonald's to require face masks in U.S. restaurants. You can see MCD, which is the ticker symbol, which on any sort of brokerage firm, I can look up MCD, McDonald's. You can look at, I believe, Intel. You can put NT and INTC, that's the ticker symbol for Intel. So let's say you are on E-Trade or Stash, whatever it may be, whatever app, website you're using in order to invest in stocks, you can put in the tick. Usually when people are asking, oh, what's the symbol? Oh, what's the name? Oh, what's the ticker symbol? What's the cash sign? Whatever it may be, they're referring to these either 3, 4, 5 letters that basically are assigned to the stock when it got listed on the stock market. So Also good on Robinhood. You know, cruise lines got murdered. I'm not gonna lie. You can see your today's return. You can see the cost, which is the overall cost, how much money you put into the shares. You can see your market value, which is how much the shares are worth right now. Cost is the previous value. Yeah, you can tell. You can tell they dropped a little. And then you have the total return, which is the total change. You have the amount of money it changed, and you have the percentage in which it changed. You have the amount of shares. And what's also very good on Robinhood is you can invest with fractional shares. So let's say, you know, a stock is like worth 200, maybe 1,000, maybe it's Berkshire Hathaway, right? Let's see, Berkshire Hathaway. You know, you don't have $300,000, then you can buy with fractional shares. I believe you can put in as little as $1 and you'll get, you know, 0.00001 shares of Berkshire Hathaway. So let's say you don't have the amount to pay for the total share value. Let's say you want to invest in Apple, but you don't have $400. Then, you know, you can put in however much you want. You can put in 50, right? Let's say I want to put in $600. You get 0.002 shares of Berkshire Hathaway. Also, guys, remember in all my videos, if you want to make a Robinhood account and you want a free stock, completely free on sign up, click the link in my description. It's got my Robinhood link. You sign up for an account. Remember, you have to be 18 or older, and you get a free stock to invest in. You can sell it instantly. The moment you get it, you just deposit money and you can sell it. You can liquidate it. You can withdraw it. But you're helping me out, and you're also getting a free stock that can be, you know, Apple, $400. You know, so you're helping out the YouTube channel. You're helping yourself out too. But anyways, next. There's a lot of different companies. You know, not all companies are listed on here. You know, you may want to, you know, invest in that local restaurant that you think is going to do good, Denny's, whatever it may be. But unfortunately, not all companies are listed on the stock market. You may think that, you know, that car manufacturer, oh, those cars are clean, but they might not have a ticker symbol. They might not even have a stock that you can buy and invest in right now. So you really want to make sure. There's also different stock markets. So if there's a company you want to invest in, then make sure that other stock markets like the Chinese one, the UK one, whatever it may be, make sure that that stock is on the right stock market, because Robinhood and these ones, depending on your location, this one is the NASDAQ, so it is, you know, the New York Stock Exchange, NYSE, and so it contains, you know, Snapchat, Apple, it contains, you know, HP, whatever it may be, all these very good stocks that you can invest in only in the NYSE, the New York Stock Exchange. So you want to make sure that you are signing up for the right stock market and you are investing in the right one in order to invest in certain companies. And that might be confusing to you guys. Please do your own research on. If anything that I say is very confusing to you guys, remember this is something that you're in for the long term, and it takes a lot of education in order to fully understand what, you know, and the full gist of investing. But anyways, another very cool thing, you have the earnings, you have the analyst ratings, so you can see what people at Morningstar, which is an investing firm, you can see what the bulls and the bears say. So another two key terms is bulls, people that think the stock is going to go up, and then if you're bearish or if you're a bear, you think the stock is going to go down in the long term, okay? So two very key terms that a lot of people are always saying, you know, on the news and investment firms. So you ask, oh, are you bearish on that one? Are you bullish on that one? Whatever it may be. A lot of people say these key terms. You're going to hear it a lot, especially in the stock investing community. Next, you have the earnings. So unfortunately, Snapchat has not been profitable a lot on the earnings. But you can see in Q4 2019, they were very profitable. They profited 3 cents per share. So a share is a certain, you know, percentage of a company, right? So if you're buying a share, right, you are technically owing, you know, 0.0000 whatever 1% of that company, and you are of course getting the profits or the non-profits from that company either going successfully upwards or your share, right? Because if the company does bad, it could go down in value and you could actually lose money. So You have the earnings right here. You can see what people estimated, of course, on Robinhood, which is the darker one. And then this one, the actual, you can see what actually happened. And another thing that can sway the stock market a lot is the earnings reports. So if people estimate that, let's say this was all the way right here, right? And then the actual was right here, then the stock would absolutely boom upwards because it did way better than what people estimated it was going to do. So let's say people estimated that Tesla was going to be negative, right? But then it actually came out with its earnings and it was very profitable. Then people are going to see that as a perfect time to invest. And of course, there's going to be a short-term upwards movement on the stock share price. So another very important key term. So this is basically chapter 2 of part 1. If you guys are still watching and you learned anything in this video, go ahead and like, subscribe, and hit the notification bell so you don't miss any of my next videos. I do a lot of stock analysis videos. I do the news, whatever it may be. I'm really interested in the electric vehicle industry. So if you like that kind of stuff and you like to invest in stocks, if you like investing in real estate, whatever it may be, go ahead and subscribe and you won't miss my next video. Thank you guys so much. And the next key term we have on the list is ETFs, right? So an so for, let's say you look up Apple, right? Or you look up Snapchat. So if I were to buy one share of this, then I'll be buying one share of Snapchat, that single company, right? But an ETF like SPY or FAS or FAZ, right? ETFs, it has it in the name, you're buying technically one share, but that one share is spread out of multiple different companies. So technically, let's say you buy one share of this for $320, then it's going to disperse that money this is a very, very well-known ETF. It's called SPY, the Spider S&P 500. So when people say, on the news, you probably see this on the news a lot, the S&P 500 is up 5% or the down 5%, whatever it may be. This is the top 500. The top 500 companies are in one ETF. So, a huge group of investors at Spider, they created this ETF in order to track the top 500 companies in one ETF. So when you buy this one ETF share, then you're diversifying your value, right? The money you put up, which is $320 as of right now. It fluctuates a lot. This one's at $220. It was at $1,337, right? It goes up and down. It's like a regular stock, but instead you're diversifying it over a large amount of different companies. So, different ETFs, there could be gold ETFs, there could be, electric vehicle ETFs, there's this financial ETFs, right? So basically, this is the best way to diversify your money in a very simple and very conservative and very safe way, right? With these ETFs, there's not a whole lot of big movements. I mean, this one moved 50% in 5 years. So there's not, this maybe could move 2% in one day, 3%, 5%, while companies like AMD, single companies in one stock, those could move 10, 20, 30, 40%. They could absolutely, go uphill or they could go downhill to zero, right? But these ETFs, it would take a lot of bankruptcies and a lot of movement in these 500 different companies in order to make this ETF move a lot. So if you just want to park your money, in some place and get the dividends, which is something we'll get into in the next video. If you want to get those dividends over time, or if you want to get steady increases over a very long time range, then ETFs are the perfect way to do it if you want to be very conservative in your money. You want to put if you're a long-term investor, 5, 10, 20 years, the rest of your life, I recommend putting at least 40 to 50% of your stock market investments in ETFs. So let's say you're putting $10,000, put $5,000 in a number of different ETFs that you do a lot of research on in order to find out the different companies. So there's like Apple in this one, there's Intel, there's AMD, there's all these different major companies. And if you didn't do your research on, well, then you don't know, even for an ETF, you don't know what companies you're investing in. And there's also different types of ETFs. There's 3x ETFs, which if they were to make a 1x ETF, it would just basically be tracking the financial market. So this is companies like Visa in here, there's PayPal in here, there's MasterCard in here, there's all these different companies. But what a 3x does is just like what it sounds like, it's doing 3 times the movement. So a regular ETF could move like no more than like 2% in a day, 3% in a day. But this one can make major movements because it's tracking the regular movement of a 1x ETF by times 3. So let's say the financial market with the exact same companies in it moves only $1. Well, this one would be moving $3, right? It'd be tracking the same exact direction, except there's also another key term, right? There's the bulls, right? Test yourself. What does that mean? There's the same exact ETF, except this one's a bear. Test yourself. What does that mean? So this one, in the 5 years, you may think this, wow, horrible investment, right? But this is a bear ETF. So as, stocks go up, this ETF goes down. It does the exact opposite. This is a bull ETF. Last 5 years, you can see, before Corona, it was doing very, very good. Of course, huge recession is a 3x ETF. Wow, it went down from $107 to $17. That's the thing with these leveraged 3x ETFs. They can make major movements. And so you don't want to put a lot of money in these ETFs if you don't do a lot of research in them. And you also, from an investor standpoint, you want to put maybe 5, maybe 10% in these 3x ETFs. But because let's say you put in 50%, or let's say you put in 100%, right? If you were to put in 100% in this one, right, during the years, you're doing pretty good. You're making a lot of money, but then a recession comes by and bang, you have 1/5 of your money left. That is absolutely devastating, and that is the thing that happens all the time with these 3x ETFs. So they may sound safe. It's an ETF. There's a lot of different companies in here. There's probably like 50, 100, 200 different companies in here, but it's tracking the movement by 3. So you want to find out, is it an ETF? Is it a regular stock? Then in the next video, we're going to find out, how to analyze these different numbers. What's a dividend yield? What's volume? Open price, close price. We're going to go over all that in the next video. What's market cap? All these different terms, all these different sectors, right? You want to figure out, as an ETF, is it a regular stock? Is it bull? Is it bear? Is it 3x, 2x, 4x, 1x? All these different things are things you want to look out for when you're analyzing a certain stock. But anyways, guys, if you learned anything in this video today and you don't want to miss the next part of this series, go ahead and like, subscribe, and hit the notification bell so you don't miss my next video. And let me know down in the comment section if you learned anything or if you have any suggestions for the next video. Thank you guys so much for watching and have a great day.